All right, so why trade options? Why invest time and energy and effort learning how to trade options? What is the appeal? Well, let me share with you my reasons why I trade options. There are many, but I'll try and condense it down to just a handful of bullet points because they really are a vehicle and an instrument like nothing else that's out there. All right, they are a little bit more complex, but really not any more so than trading equities or futures or commodities, gold. It doesn't matter. Once you understand the subtle nuances in options, okay? So first off, options offer additional leverage, right? Once you understand what options actually are that are defined in the trading manual that you have access to, options offer that added leverage, 100 to 1 to be exact. All right, so for every one option contract you buy or sell, you are controlling 100 shares of an underlying equity. So right off the bat, you are more efficiently and more effectively using your capital. And if your capital is limited, all right, well, we absolutely want to use it the most efficient way possible. And options absolutely offer that. So they, that leverage can obviously work for you as it can work against you, but options offer that added leverage in the form of 100 to 1 multiplier. You could control 100 shares of an underlying asset that if you look at Priceline or one of these high flyers that's $1,000+ a share, and you want to trade 100 shares of that, well, it's easily done for pennies on the dollar with trading options than outlaying the full capital amount to trade the actual shares. All right, so that's number one. Number two, you have very limited and defined risk. You're only limited to what you are, if you're buying, in the case of buying options, you are limited to what you are paying for the cost of an option. So let me just bring one over here. I'll pick any one of these. Amazon. Let's just look at Amazon. So this is OptionView software platform. It has the prices of what options buy and sell for, as well as expiration dates and times. Price charts, risk graphs. It's a very powerful software platform. But right here you can see this particular option. It's bid 1340, ask 1390. So I could probably buy that option for midpoint, probably about 1365, right? Market price right there. So if I'm going to buy an option, 1365 times 100, that's going to set me back $1,300. I know right off the bat what my defined risk is if I'm buying an option. Now, if I'm selling options, that's a little bit different unless we hedge off that risk in the form of a spread by buying and selling options, all right? So that's what we really get into discussing and talking about. So it's bullet point number 2, limited and defined risk. You can limit your risk literally down to, less than $10 if you really wanted. There's this misbelief or misperception that you need thousands and thousands of dollars to trade options when in fact that's not true. It makes it a little easier to make profits when you have a little bit larger of an account size, but my recommended starting account size is you can trade these things with as little as $2,500 and do well. Absolutely. All right. 3, you don't have to pick a market direction. That's probably maybe one of the most appealing. If I look at this stock right here, this is Amazon, all right, and I look at this price chart, you want to put, if you're going to buy 100 shares of Amazon and it's going to be selling for $800 a share, right? I mean, are you going to be laying out 80 grand and trying to pick a direction? Is it going up? Is it going down? Don't know. Nobody knows. Some people think they know, but the reality is nobody knows which way a stock is going to move up or down. Now, we make educated guesses and we use probabilities and statistical analysis and all these advanced topics of where we think it might be going, but the reality and the bottom line is nobody knows for certain where a stock is going, up or down. So I can use options and my knowledge of trading options to create positions that don't require the stock to go up or down. It stays within a range, and if it stays within that range, I profit wildly. If it goes out of that range, I mitigate my risk, I cut my loss, I have defined risk from the get-go, and the trade just didn't win. All right, so and that's for much less capital than $80,000 for one trade. All right. Fourth, you can really reduce your cost basis on a stock, and that is done in the form of, let's just stay with Amazon, and let's say, for example, that I go back in time, all right? And let's just say I go back in time when Amazon was trading for $300 a share, and I really, 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 really liked Amazon for $300 a share, all right? So if I think Amazon is going higher and I really like it for $300 a share, how much happier am I going to be if I can pick up Amazon for $275 or $250 or $280 a share, right? And so by using what we learn about trading options, I can reduce my cost basis on entry if this is, say, a stock I want to put in a long-term portion of my portfolio. If I want to buy 10 shares of Amazon that I'm going to keep forever because I love the company, I'm never going to sell them, I don't care where it goes, it's a long-term investment, and I liked it at 300, and I mean I really liked it at 300, well, I can use my knowledge of options and reduce that cost basis by selling puts on shares I don't own. And again, that's something you can learn, something we talk about, something we discuss, but it's another reason why I think options are a great way to be traded. And then last, and I mean, certainly there's many, many more reasons, but I just tried to bring in 5 bullet points here. You can insure or you can hedge against a much larger portfolio. And originally, that's what options were created and designed to do, is to provide large funds, large traders, accredited investors, people that are trading large sums of money, the ability and the opportunity to protect and insure against a massive market decline. And that is the origination or the genesis of how options came to be. And so, it's one simple way to notice that is look at the out of the money options. The put options always are going to have a much higher implied volatility than out of the money call options. All right, and so that's just another added feature, another added layer or element of options is if you're trying to protect a much larger portfolio, you can use your knowledge of options to buy some puts or to sell some calls, or a combination of various spreads to insure against a sizable market decline or a massive move in the market. All right, so there's many reasons why trade options, but those 5 I think are probably the top 5 for sure. The top 5 why I like to trade options. We could even add a few more. You can trade them on a weekly basis. You can trade them on a daily basis. You can trade monthly trades. You can trade options on futures, on currencies, on commodities. I mean, the list is very lengthy, but those top 5 reasons I think are going to be the top 5 why I like to trade options.